Still down about 1%, but what's the global picture looking like, and how are FIIs reading all those quick developments in the US? Lehman is, or seems to be, becoming the latest casualty, going by the kind of 40% plus cut we saw in the price on Wall Street yesterday. Well, Dariusz Kowalczyk, Chief Investment Strategist at CFC Seymour, joins us for a quick check on all of that and more. Dariusz, morning, and thanks very much for being with us. Now, 2 days after that mega bailout came out from the US Treasury, do you also get the sense that perhaps the market was being overly optimistic and euphoric, because much of that euphoria seems to have died down pretty quickly?
It's true that yesterday saw a reversal of much of the gains made by the markets initially after the bailout of Fannie and Freddie, but I am still optimistic that in the medium term this bailout will be a watershed moment for the financial markets, because we have seen a transfer of risk from the private to the public sector, which would encourage risk-taking. So I'm hoping that equity markets will actually recover despite the correction of early gains that we saw yesterday.
How are you calling the rupee and the movement of the dollar at this point, Dariusz? It's breached 45 in early trade this morning.
Indeed, and my take on the rupee has shifted somewhat following the recent comments from the new central bank governor, who said that he has been pleased with how the rupee has performed. I used to think that the central bank will try to strengthen the currency due to the inflationary impacts of its weakness, but it seems that he basically probably bets on the support weak rupee will give to the exporters and will fight inflation through interest rates. And therefore, we have revised upwards our targets for the year end for the rupee from 42.5 to 44 against the US dollar.
But Dariusz, what does that mean from the FII point of view? Because we're talking about 45 on the screen right now, with a net outflow figure of in excess of $7 billion already. What will the FIIs feel at such levels of the domestic currency?
A lot depends on the potential speed of any further depreciation. However, in my mind, as long as investors do not think that the currency will lose much value, they will not be concerned about outlook for some further losses, and they will rather focus on their view on the equity market. And in this respect, everything depends not so much on Indian fundamentals, but rather on global sentiment. If I'm correct that risk appetite will improve after Fannie and Freddie bailout, then equities in the US and elsewhere should recover, and there should be some flow back of foreign capital into India.
What's your own sense on inflation and GDP growth for a market like India here on Dariusz?
My forecast is that inflation will tick up slightly this week to 12.4, and then end the year somewhere between 11 and 11.5%, which is a fairly substantial level before declining in the first half of next year. GDP growth, our forecast is, will slow this calendar year to 7.6 from 9.3%. So some slowdown, and it will be felt in industrial production data, which will see some pickup from the previous month, but not as much as the market expects. We are going for 6% up year on year.
What about valuations, Dariusz? How's the market, Indian market, looking from the valuation standpoint now compared to some of the other Asian peers?
Well, it looks relatively expensive actually, because it's very close to, in terms of forward-looking price-earning ratios, it's very close to China. Only Japan is a little bit more expensive, but on the other hand, the long-term growth potential for India is so much stronger. So the key problem here is that despite the favorable long-term outlook, the high inflation levels are discouraging foreign investors from putting too much money into the country right now. We need to see a more substantial decline in inflation before that can occur.
Your own thoughts on interest rates and where they could head in India from here on?
Pardon me?
Interest rates, how do you see them moving in India from here on, Dariusz?
Well, I think that we will see a 25 basis point increase in October. Again, we have changed the outlook here a little bit after the appointment of the new central bank governor, because his recent comments suggest that he is very careful about how monetary policy will impact growth, more careful than his predecessor. So I no longer expect an aggressive tightening going forward, but maybe one more small step, and that would be it.
Quick word on the global picture once again, Dariusz. You seem to be among the more optimistic set of analysts, because despite what we saw with Freddie and Fannie, the fact is that there seems to be fresh trouble brewing within Lehman. What's your own take on where we are in the wheel as far as the US economy is concerned, and the trouble that is being spoken of in Europe now?
Lehman's future is quite unpredictable, but because investment banks can now get access to Fed funding against their assets used as collateral, which was not the case with Bear Stearns, I do not expect a collapse. I think that the company will survive and its price should recover. As far as growth in the U.S. goes, we are going for 1.8% expansion this and next year, which is somewhat above market consensus, because it seems that consumers in the U.S. have spent relatively little of the tax rebates in the second quarter, and these rebates will continue to support consumption in the second half of this year. On the other hand, however, Europe will see technical recession, probably already with the Q3 data, because governments there are doing much less and the central bank is doing nothing to support the faltering economy.
Finally, Dariusz, you think the dollar will continue to strengthen for the rest of the year?
In my mind, the move in the dollar, the sharp gains over the past 2 months have been excessive and in the least have fully accounted for the improvement in relative fundamentals on the growth and interest rate front that we saw with the U.S. economy recently. So I think that through the end of the year, the dollar should depreciate somewhat against major currencies, such as against the euro, from the current 141 to 148.
Right, Dariusz, we'll leave it at that. Thanks so much for joining us this morning and sharing your thoughts. That's Dariusz Kowalczyk, Chief Investment Strategist at CFC Seymour. As we wind